Good morning, everyone. As we're letting people in. All right, looks like everyone's connecting to their audio. Karen Blackwell was one of the speakers at the introduction today with Maria, and just such a fabulous business. Karen, I hope that you can put your information in the chat. I think everyone should try your chocolate. It is amazing. So good morning, everyone. My name is Shanae Rourke, and I am the president and CEO of Redwood Resources. And I'm also the co-chair for the Small Business Council, along with the chair, Michael Ochoa, and Kevin King. I'm excited to be here today to introduce this phenomenal panel on funding for growth and scaling in the new economy. Before we begin, just a few housekeeping announcements, if we could. Please make sure to stay muted to avoid any background noise and to make sure that we can hear all the panelists very clearly with all the great information that they will be providing. Also, e-network. This is a great opportunity to network with people in the chat. Make sure to introduce yourself in the chat with your name, your title, and also your organization, and also your LinkedIn. If you have a LinkedIn link, please put that there so people can do a one-click and connect with you that way. Also utilize the chat to communicate any questions that you might have for the Q&A portion, as well as to chat with other attendees. I'd also like to thank our sponsors for this. Without them, this would not have occurred. Our presenting sponsor, Wells Fargo, along with our sponsors, Bank of America, Kaiser Permanente, Facebook, and Safer at Work. So please visit with them, check them out. Today, we're going to talk with the funders, who the funders are, what they look for in the businesses that they invest. We'll discuss financial tools and investments to succeed, as well as what to avoid that would prevent your business from growing. Now, our moderator, Tanua Thrash-Intook is Executive Director for the Los Angeles Local Initiatives Support Corporation. We all know it as LA LISC. She is a seasoned community and economic development practitioner with more than 15 years, with strengths ranging from community advocacy to asset and real estate development and neighborhood revitalization. So please, let's welcome Tanua.
Hi, good morning, and thanks so much, Shanae. I really appreciate the introduction and kicking us off for this session. As was stated, I'm Tanua Thrash-Intook, Executive Director for LISC Los Angeles. And many of you know us as a community development financial institution, a CDFI, and we work alongside with a number of our panelists that I'm going to be introducing to bring capital, access, and opportunity to communities that need it most. Last year, we were proud to help spearhead the LA COVID Fund, bringing over $100 million to small businesses and nonprofits in the LA region. In addition to that, we still were lending because we know that lending is a critical part of making sure our businesses have what they need in order to move forward. So let me introduce the panelists that we've got today. First, we've got Kenny Salas. He's COO and co-founder of Camino Financial, an online lender serving underbanked small businesses. He's the host of the reality show Emprendedores on Discovery in Espanol. Welcome, Kenny.
Hello, it's an honor to be here.
Wonderful. Well, we're glad to have you. We've also got on the line B. Stotzer, a friend and a colleague and someone I've worked with for a lot of years, CEO of New Capital LLC. She's managing multi-million-dollar portfolio that includes affordable housing, business, and economic development. She has more than 30 years of leadership, advising everyone from the Clinton administration to the mayor of Los Angeles and many more. Call upon B. B, thanks for being here today.
Thank you, Tanua. Wonderful to see everyone.
And last but certainly not least, we have Luana Lindsay. She's an 18-year veteran of her company. She's Senior Vice President and Business Segment Manager for Small Business for the Greater California South region. She's with Wells Fargo. Within this region, Luana is responsible for the small business strategy, which supports team members and the overall customer experience for small businesses in nearly 400 branches. So she's seen a lot of businesses over the years. Thanks for being here, Luana.
Thank you so much. It's a great time to be here. We're opening the state, getting our small businesses back to business. And it's just really, this is so timely. So I'm really glad we're hosting this as well.
Well, Luana, your comments are really kicking us off into this conversation, funding for growth and moving our businesses forward. So let's get started with that very first question. Luana, you started in on it. No matter what's happening in the world, a pandemic, an economic crisis, a racial awakening, our businesses need capital to keep moving forward. And all of these institutions here for our businesses that are on are here to do just that. Luana, I'm going to start with you. The question of the day is, what capital is available from an institution like yours for small businesses right now?
Yes, now that we've, exhausted the PPP opportunity for our small businesses, which hopefully we have a lot of people on the conference that was able to take advantage of that. We have our traditional, which is secured and unsecured loans and lines of credit for our small businesses. Secured is where you put up some capital, maybe equipment, real estate, something of that nature. And unsecured goes basically off of the cash flow of your business, able to take on debt and have the ability to repay that debt. So those are the two traditional ways to get funding from a bank.
So Luana, you've got working capital, and then you've got capital that is based on some secured position in another asset right now. So Kenny, let's get you in on this conversation. You're a different kind of institution. You don't have a branch like Luana does. You're online. What kind of capital are you providing for small businesses right now?
Yeah, and we define ourselves as a fintech. That stands for a financial technology company. And originally, when fintech became a thing, we were mainly tech enabled. And now we're using AI, artificial intelligence, to offer this product. We offer an unsecured term loan. So similar to what Luana is offering but we're thinking by using AI, it gives us a little bit more flexibility to amplify our credit box. So just to give you a sense of who we're offering working capital, we're offering working capital to businesses that have been in operation as little as 9 months. In addition to that, you may not have any credit history. You may not have a FICO score. So we're really focused on the underbanked, not the unbanked, because we actually still look at the bank transactions in order to measure the debt capacity of the people that look at Camino Financial for an unsecured term loan up to 2 years, up to 36 months, sorry.
Great, that's good to know. So depending on how long you've been in business, you should have a bank account no matter what. We're encouraging that because I think, of the institutions, certainly ours as well, is looking for that. But there is an opportunity to get you started with some capital, even if you're new. So B, you are a community development financial institution. You've got several different kinds of resources, technical assistance for small businesses. What kind of capital do you all have available right now?
Under the New Economics for Women, Women's SBA Women's Business Center, for example, there are several. There's SBA Loans, which means that you have to have all of your documents in order. As low right now, EIDL is at 2% for 30 years as a result of COVID, if you've been damaged by COVID. A hub for Kiva, which means you could be a startup, and a partnership with LISC, which is very exciting. In terms of very micro businesses, we're able to help them with that. Also, we also have a lot of partnerships with the Jewish Fund and helping owners really understand how they can leverage their capital and really helping even growth businesses get access to CDFI funds, which are much easier and a lot quicker to get than most traditional banks.
So B, only because it's in partnership with LISC, I'm going to ask you, let's talk a little bit more about the Kiva opportunity. So we're really excited to be partnered with New Economics for Women and to have you serve as a hub for the Los Angeles region. So these are microloans, right? And this is an opportunity for businesses to really rely on friends and family network and the network of organizations like ours and yours to get the word out about their business. B, are we matching those funds as well as in terms of what the local small businesses are raising?
Yes, I believe it's 2 to 3 leverage. Not only the owner needs to leverage their contacts, but ourselves as well as LISC is leveraging for every dollar what they could raise. So it's a very wonderful opportunity for micro businesses to apply.
Yeah, so you could be a startup, you could be early in the process. If you're able to raise, if you're looking to raise $5,000, if you raise that, that 2,500, the match from LISC and/or New Economics for Women will get you that additional 2,500, so you get to your goal a lot faster.
Exactly.
Great. So we're encouraging folks to, and to the extent that the staff over at the chamber can help us out, we'll make sure that the links to our various organizations and how to get access to these resources are dropped in the chat to help our small businesses find their way to us. So we've got all this capital out there, right? You all have talked about secured, unsecured. We've got, capital for startups. We've got micro capital available. What are some of the pitfalls? Why aren't businesses able to access this? What's keeping them from being able to connect with these resources? Kenneth, I saw you came off mute. Why don't you start?
Yeah, I think where small businesses have had difficulty accessing capital is when it comes down to secured loans. One, you need a security, some type of collateral in order to obtain that loan. In addition to that, the most traditional loan that you can get through banks is an SBA loan, and that's not a loan given by the SBA. That stands for Small Business Administration. It's a loan that's guaranteed by the SBA. And that enables banks to offer loans at very affordable rates. We're talking about single-digit rates. Now, nothing's free in this world. At the end of the day, banks and even the SBA want to make sure that they're taking appropriate risk. So there is I wouldn't call it an exhaustive list of documentation, but you have to have your documents in order. In addition to that, you need to be reporting on your tax return the reality of the situation. And we've all been there. I'm an entrepreneur and I work with a lot of entrepreneurs. Of course, we try to sometimes be somewhat creative when it comes to reporting our taxes. Well, if you're trying to get effectively a government subsidized loan, they're going to want to give you an incentive to report the reality. And I think properly preparing tax returns, which includes an accountant, which includes a tax professional, those are expenses. I think that's been one of the biggest barriers that I've seen in accessing this traditional source of capital. I think with fintechs, and that's why I wanted to introduce the concept of fintechs, because I think it's really important that you all understand it. That's Camino Financial. There's other ones like Cabbage. Even SoFi is a fintech for student loans, and now they're doing more type of loans, right? They're thinking they're not necessarily government subsidized loans. So it's really important that you also understand that the rates that they're offering are higher. And also by nature of being unsecured. So if the borrower doesn't pay the loan back, there's no security to effectively guarantee your loan, just like a mortgage. The reason why mortgages are so low is a house has a lot of value and it's pretty darn liquid, right? So when it comes to accessing unsecured loans, just keep in mind there's less barriers to entry because typically a fintech will not ask for your tax returns like Camino Financial, and that's standard. They're going to look more at your bank transaction data and any other data, including QuickBooks, that they can plug into through an API, which is effectively a secured backend door to download read-only this data, process it through their algorithms and artificial intelligence models in order to quote a loan. Again, it's at a higher rate because it's not government guaranteed.
This is important to know because the term fintech has been thrown out there. Those of us who are in LA, we see the SoFi Stadium and we're like, where's their branch? I haven't seen that. What is that? But I know it's a financial institution. So there's different ways of forming now financial institutions. And thank you for underscoring that these are not government backed, so they might be more expensive, and look at your cash flow as opposed to some of the other collateral items. So Bea and Luana, I want to get you all into this conversation. What are you seeing as some of the reasons why, businesses are not connecting as well with some of these capital sources? Bea?
Well, if there's one thing, one message that I would like to give to everyone is to really understand very clearly your relationship with money. Do you love it? Do you fear it? Do you not know much about it? You need to, your mindset has to be around, what does that money in your business mean? What we have found that there are very simple barriers to entry for a loan. Documents don't match the names of the person, of the company, or anything else. It's the bookkeeper that decides on how the business should be run because the owner doesn't have enough time to deal with it. Just simple things like not understanding how to do deposits in what bank accounts so that you're able to segregate your accounts. But more importantly, most owners are experts in their business, but they're not experts in business. Understanding what strategy should be in order for growth is critical. But most everyone that we encounter when they're trying to do the business plan, and why many banks and institutions require a business plan, is to really focus in and discipline the business and you as to who you are, what you want to do, and at the end, what do you want to be? You have to have those elements in place in order for you to grow. The other aspect of it is, are you running the business to avoid taxes? Are you running the business to grow wealth? And those are two very, very, very different strategies that are extremely important for business owners to understand.
Bea, that is wisdom there. I hear it. That is, why are you running the business? Is it to grow wealth? And all too often, I mean, we work with small businesses as well, and they've got fantastic products, right? They come off well, they taste great, they look great, they deliver well. But in terms of being ready for growth, which is what this conversation is all about, Kenny said, make sure you hire the accountant, make sure you have the attorney. But Bea says, but they don't run the business, right? So you want to make sure that you're thinking strategically about what you need to be doing from a growth perspective. And you've got to drive that as the business owner. Luana, what are you seeing as some of the pitfalls and reasons why small businesses aren't connecting with capital sources, maybe from your institution? Luana, you still muted on me.
Mute. All right. So great input from Bea and Kenneth. What I would add is to really watch your cash flow. And, business owners get so busy doing what they do best, manufacturing product, handling, their employees, things like that. But you've really got to run the business element of it. So a few tips would be to really accelerate your inflow. Send out your invoices immediately so that you get that income coming in. Make sure you offer a lot of different ways for people to pay you for your product and services. That's really important. Monitor your cost. Track your regular bills. Really get a handle on that part of your business, as well as watching your outflow. Are you taking advantage of all the opportunities, paying and getting rewards and things like that on your cards that you may be using for temporary cash flow? And then, cover your taxes. You got to set that money aside. It will come. eventually. So being prepared and watching your cash flow and being well prepared will help a business owner really know when they're really ready to take on that additional debt. And it will help a bank understand how well they're run as a business. So that would be my few little advices, along with hiring that good CPA and attorney to really help get that advice and to develop that strategy.
And
That's
Chinua,
great.
if I can may just jump
Yes,
in
please.
there, I mean, and Luana, you said it. I mean, cash flow is king and queen when it comes to managing a business, and really our two main reasons why we decline applications is one, a very poor credit, not no credit, very poor credit, and it's very important that at the end of the day, if you're asking someone or an institution for money, you need to check the box on character. And there are a lot of institutions that will give you a chance, but if somebody's giving you a chance and you haven't, fulfilled that obligation, and I know there's a lot, COVID was very tough, and we can have a separate conversation on that, but you need to have the track record that checks the box on character. But the second one is cash flow. I mean, I for a lot of micro businesses that we see, and these are businesses that earn less than $1 million in revenue, it really pains me to see how many negative days, like negative balances, there are in those bank accounts. And as B said, sometimes it's just, you're just putting the money in the wrong account. and be careful, because a lot of banks are starting to waive overdraft fees, but it's going to get you in the long run, because creditors are going to look at those negative days. They're going to be like, well, if I'm automatically taking money from that account, because a lot of this stuff is direct deposit, ACH, right? And there's no money in the account, like that, the risk profile increases substantially. So I just wanted to give you the credit perspective on Luana's comment.
No, this is good. And we're going to get into the COVID piece, but there's a question already in the chat, and I'm going to bring it up to our panelists and those out there who want to be part of this conversation. Pop it in the chat. I'm one of those facilitators who looks around and see what's happening and want to get you all in the conversation. So Kenny, you and a couple of you, Luana, as well, you started talking about credit. One of our attendees wants to know, are you specifically referencing the personal credit of the owner or the business credit, or both? Just trying to make sure.
That is an excellent question. I'll just jump in here. We look at both. And one of the ways that we usually have our small business owners get their first piece of credit is usually through a business credit card. And that can be done right at the opening up of a business account. But that's reliant upon how your personal credit has been managed. So we're really anxious to get our business owners with their first piece of credit, let them start establishing a relationship, let them show what good repayment history and that they can manage their credit. So that is usually how business owners get their first piece of credit when coming to a traditional lender such as Wells Fargo. I'll hand it over to the rest of the team.
That's right.
Yep, and I was actually going to say the credit card was the first type of credit that Camino Financial used for working capital, and it's just very accessible, and there's so many great products out there. I would say the only pitfall of the credit card is because it's there may just be minimum payments and it doesn't amortize. Amortize means that, like, if you get $10,000 over just 10 months, every month you're paying down 1 month of principal, right? Just to use some it forces you to make that payment. It's just important that as you use credit cards, just keep in mind it's for that working capital. So you should really only use it for a 30 to 60 day period. If not, you may be caught with very high credit card balances, which, going to the point on personal credit, Luana's nailed it. We look at personal credit and we look at business credit. Keep in mind, every lender looks at both. The key is any way they can, evaluate your character, they're going to use those data sources, and these data sources are becoming more accessible in terms of it's all in one place, right? Big data, and it's becoming cheaper to access too. Now at Camino Financial, I'm assuming a lot of institutions do this. They do soft pulls on your credit. So before, it used to be pretty expensive because you pulled the hard pull, which actually impacted your credit score. Now we do soft pulls on your personal credit as a first screen, but later down the funnel, we also do look at the business credit. So every lender looks at it differently. The only tip here on the credit cards is just be careful with maintaining very high balances, because you may get declined for a term loan or another credit card if you can't pay that down.
Yeah.
And
Can
go
I
ahead,
just,
Bea. Yeah, go ahead.
I think one of the things that people don't understand about lending is that lenders keep you honest because they have to look at everything. So if you approach it with that viewpoint, I think you may be able to have a relationship, hopefully with someone, with whatever lender that is, so that they can help you be much more transparent, so they can help you build those steps forward. So it may be a small loan, maybe $5,000 loan. You may want to start just for capital for a short period of time so you can pay it back and go for a bigger loan and go for a bigger loan. But lenders are there to keep you honest and make sure that you have everything in order. There are some lenders that want to rip you off, obviously, because they're predatory, and the high cost of capital has to be part of that analysis, regardless of how desperate you are for the loan, because the high cost of that capital could be the reason why you go down, not the reason why you're going to stay in business. So there's a lot of stress when to be a business owner. Just be careful of what you want to do with it.
Yeah, I appreciate my partners in the chat underscoring some of the key messages that you all are providing. And thank you also, Kenny, and to the rest of the panel for kind of showing the difference between a credit card and a more investment type loan, where you've got that amortization and you know exactly how much it's going to be every month, and you're really using that for growth capital, as opposed to the credit card, which has got that interest rate that continues to balloon and grow on you. So you want to use that in a way that's really short term, getting, like you said, 30, 60 days, returning those funds so that you're not building up high interest on that. So you started talking about it a little bit, and this has got to be on everybody's mind, right? And that is 2020, our small businesses took terrible hits, right? Nobody was ready for our economy to just close and stop and change. And even the greatest pivots needed a moment to make that happen, and needed, in many cases, we've talked about the PPP and other equity and grant sources in order to make that happen. So, we're in a different place right now, right? Folks are getting vaccinated. People have learned. Businesses have been able to, figure out what they're going to do in a post-pandemic society. Let's talk a little bit about, what does resiliency look like for small businesses post-COVID? What have we learned, and what resources are out there? Where can businesses turn to right now for that growth capital going forward? Bea, you ready to tackle that question?
I'll tackle a part of it. I think resiliency, we don't know what resiliency is going to look at post-COVID, I don't think, because it's still too early. What we found is that our business that were equipped to adjust and shift very quickly were the ones that survived. And very small businesses like hair salons, moving from, having a storefront to having all of the business running from your home. The landscape is littered with, businesses that are very good at shifting their delivery systems and how they're attracting clients. I think the resources that are going to be available post-COVID are still being developed. I think what we learned very quickly as a nation is that small businesses are the engine for the economy, and we need to keep them going. Especially women-owned businesses, because they are the shoulder of the economy as far as I'm concerned. But that's, where my passion is. The other thing that I think is happening is restructuring debt and credit is really being looked at very differently, so it could be accessed and not so encumbered. And I think that's where I see the opportunity going. How that's going to look like, I think we're all still trying to figure that out.
Well, B, we're really glad that you're there. The New Economics for Women has a focus on women, small businesses who were all hit too hard last year during the COVID crisis. Kenneth, why don't we get you in this conversation? You know, you started talking about it. COVID, you know, did a doozy. What's next? What can we be doing?
Yeah, I mean, B definitely alluded to this with the barber beauty shop examples. Is it's the point of how can you continue to operate when you don't have a store location? And well, technology, you have to adopt technology to operate your business. And that's why we've seen a lot of tech stocks in the market really grow during COVID, a lot of other dynamics, but it also represents a acceleration of trends, not necessarily things that came out of nowhere, right? DoorDash is a great example, right? Or even e-commerce is a great example. DoorDash, which delivers food, or any e-commerce, like it already existed, but now the people that were at the cusp of not using it are now using it as a substitute to potentially going to Target or going to the restaurant nearby. And so I think it's really important that, and so my point here is the business applications, the technologies like QuickBooks Online already exist, and they're very accessible, they're very affordable. So I think as a part of resiliency is adopt technology, you have to do it. I know this is going to put some of us outside of our comfort zone, but if you are going to emerge and become stronger, you 100% have to do that. As it relate, as B also mentioned, the PPP is over, okay? There are very specific programs for restaurants, venues that are out there. The Economic Disaster Relief Fund is still there as well. But you have to make sure that you're a good fit for that. I think probably in what we saw from the financial crisis in 2008 and 2009 is this is where really these online lenders emerged. I think the great news is there's a lot more oversight over online lenders now. And there are some great players out there like Camino Financial, but don't want to necessarily plug it, where we may be a little bit more flexible than your traditional lenders, while certain government programs, which are mainly local or industry focused, so that you can take time. Remember, time is money. And it's also important that as you are resilient and also recover from COVID, it's important that you invest in your company at the right time. And to the extent that you need capital, potentially that's more expensive, but you need it in you need it to be more accessible to you. Then I think fintechs are a great solution, and we totally get it. We're actually optimizing our models to capture some of the deterioration in the cash flows that occurred in 2020 and early 2021.
So the good news is that there are, there's still lenders out there like you all who can be a source when it's really, really needed. I'm going to place in the chat LA Chamber, LA EDC, LISC, our organization, and in partnership with Wells Fargo. So Luana, I'm going to get you in on this. We've got an initiative that's called Open for Business is what Wells Fargo put it together as, and it's an initiative that we're calling Together for LA. And B, I believe New Economics for Women got an Open for Business grant. So please continue to watch our various websites, get on our listservs, so you can learn about some of the initiatives that we're doing. For example, we've got an initiative. I see Nikki started talking about adopting technology. Well, part of the Together for LA, one of the initiatives will be about helping businesses who traditionally don't have access to technology or trying to figure out how to maneuver to find customers, as Kenny said, in a new way without brick and mortar. We'll have a boot camp for that to support small businesses. So we want you to stay in touch. So Luana, I've kind of maybe hopefully not stolen all of your thunder, but Wells Fargo's been leading on making sure that businesses have what they need during the crisis and now after. So tell us, what resources are available for small businesses right now, and how do we make sure they're resilient going forward as we move out of the crisis? Please unmute again.
Okay, can you hear me now? Yes.
Yes.
Between you and Kenny, you've stolen all of my thunder. But I did want just 1 minute to talk about the Open for Business Fund. That is what I personally am most proud of. Wells Fargo, we worked very hard during our PPP times. Some of us who were not in that traditional lending of approval of loans and things like that, worked very hard and got kind of put in underwriting positions and things like that. But what we did with all the fees that were collected with that is we donated those fees back into our Open for Business Fund. So it totaled about $420 million to help with the small business recovery effort. And then what we did is we had an Open for Fund opportunity for people to get the grants, and now they are in the process of executing that to small business owners who apply for those grants. So really excited that we've been able to donate those fees from our last PPP round to support more small businesses. And we know in the long run, this is all going to come back with a robust economy, people being able to produce more products and services, and their businesses and their communities will continue to thrive and grow. So that is our main objective, to really helping, donating that money back, and then making sure that small businesses have the opportunity to capitalize on those.
All right, Luana.
Also, I was just going to say, we have a small business resource center as well that people can log into. They can hear about small business owners that made it, people that have gotten grants, things like that. So it's open to everybody, and it really connects you, and I think will help people feel inspired and motivated, and we are going to come out of this together. So I just wanted to put in that last little resource.
So we're continuing to go ahead and look in the chat. So please feel free to continue to put some notes in there. I see some questions that I'm going to be pulling out. And, what I'm sensing from the chat to my fellow panelists is that people are ready to apply. They're like, okay, let's get out there and figure out, where we can apply. So let's talk about being ready, right? There was a question in the chat about going to a CDFI versus a bank. There are some questions about, just being ready in general. Kenny, maybe we can start with you. You're the kinds of things that people need to bring to you sound like they're different from what they might be bringing to Luana. How can businesses be ready to access capital from Camino Financial?
Yeah, so in terms of documentation, there's only two requirements. The first one is having an online bank account. It can be personal or business. And then the second one is proof of business. So if you're a sole proprietor, you should have a DBA, which effectively just is a business registration, or the articles of incorporation if you're an LLC or some type of corporation. So that's really the basic. Now, what I would say in terms of preparation, first, in terms of your bank statements, if I would call it even the last 30 days, if you still have a lot of, if you've experienced negative balances in your bank account, I recommend that you wait for at least a month with less than 3 negative balances on your bank account. Again, we can be pretty flexible, but try to avoid having any negative, your balance going down below in any of those accounts, because once you do link them read only again through an API, we will be able to see that, and that's going to hurt your ability to access capital, or will even increase your rate. So that's, and then of course, and make sure that your documents, that just the documents are not expired, because you can have proof of income, but let's just make sure that it's not a DBA that expired a year ago. These are, again, the things that can slow things down. And that's my recommendation.
Great. So hopefully our business owners are taking notes on that. I love that Sharon is popping into the chat. She's saying, don't forget, there's all kinds of sources, traditional, which we have on the line, community banks, as well as low-cost CDFIs. And we've got fintechs on the line with Camino Financial. So, and there are other low-cost loan funds that cities or counties might also be operating. So the expert guidance that she's offering is know your best fit, what's best for you and your business at the moment. Luana and B, let's talk a little bit about what businesses need in order to be ready to successfully navigate capital from your institutions. Luana, you ready?
Okay. What they'll need to do is, first, I would recommend that they talk with a bank associate, a small business banker. We have them in the branches, able to give advice and to see what is the right fit for their credit need. Be creative. Look at all the opportunities that are out there to see what is the best fit for them. Don't just jump into something, but really do your research. Talk, consult, find out what you're really looking for, and know what is the best product to put you into. It may be a credit card. It may be something more sophisticated, like a line of credit that you can borrow and pay back. It may be a refinance on a commercial real estate that was bought or maybe handed down through a family member, and you can get those resources or get some of the equity in that to help you with your next venture. So really do your research, know what it is, what you're going to need, not just I need money, but what's the purpose? How can we help you? What's gonna be the long-term effect of getting that capital right now? So I'll hand over to B and see what she has to add to that.
Sounds good.
All of that and more, unfortunately. The Women's Business Center will help you create your business plan, will help you get ready. But I think in addition to all of that, easy entry is absolutely a wonderful opportunity. I think what Ken has brought to here at the panel is very, very important for you. But more importantly, what we do, and I think as originators of loans, and we see the whole platform, is to really understand and be that all of your documents match. Because as Latinos, we name different things for different things, you know. We had a situation where we had an incredible taco stand that did a lot of great business, but because the name of the business was different in 3 different documents because he misspelled them, he could not get a PPP loan, unfortunately. It was so frustrating. So be careful, understand what I said before about doing the business. The other thing that is extremely important is really understand your cash flow. Because if you don't understand why you're not able to pay it down, what you need in order to pay it down, how long is it going to take you to clear your credit, you're going to get stuck on you're not doing well enough for us to help you. Unless you get quick money that is going to be higher interest rate. So go back to the basics of a good business plan.
So what I'm going to do now, this is great because you all are hitting, I want to get into the business plan a little bit more and dig into that. But I'm seeing some friends in the chat here and want to make sure we get to some of that. So thanks for sharing, Courtney, that CSUN is got a small business consulting program and is accepting new clients. Check out the chat there. Currently, it appears there's no cost to clients, and hopefully that's because we know that we want to get some of those great small businesses in there. There's also, we've talked a little bit, Kenny, you talked about the employee retention tax credit. Might you just share for a moment what that is and how that might be a great way for those small businesses who have employees to save money?
So it is based on, the the employee tax credit basically allows you to save on payroll taxes. I mean, that can be up to 8% of what you're paying every employee every month. These are for W-2 employees. These are not for contractors. I think through PPP, we learned the difference of what an actual employee is. So if you don't run payroll, this doesn't apply to you. And effectively, it's a tax form that you fill out, and you have to demonstrate that you've been severely impacted by the impact of COVID, the pandemic. And if you can demonstrate that on a quarterly basis, because they give it to you by quarter, they assess it every quarter, you can access that. I don't know if it's retroactive, honestly. I would have to ask my accountant, because we jumped on it pretty early, and we've saved hundreds of thousands of dollars. So it's a real tax credit.
Great. And then there's also a question. This really gets to technical assistance. We've talked a lot about the need for professional services to support your business, accounting, legal support. Do we have any technical assistance resources that could help someone identify a CPA or get connected with a professional in the accounting arena?
We don't give referrals because we never know what's going to happen. So that's a hard question, but I would recommend that you start networking with the chamber, with other associations, and start asking the questions that you need to get answered.
And certainly, the networking is going to help, getting connected with a chamber that's going to have CPAs who are probably part of the membership. And then really seeking out those businesses who you see are doing well and asking them, who's helping, who's assisting you, who's your professional accountant, and start doing some interviews. If you know you have a bad one, then those are the things that I'm sure you're going to make sure you ask questions about and try to avoid the next time around in doing that hire. Kenny, did you want to get in on that?
Yeah, I'd like to jump in and also just distinguish between a CPA who really is going to prepare your taxes at the end of the year, and they may also look at certain things on a quarterly basis, and then your bookkeeper, who is more really, bookkeeping should be an ongoing thing that you do on a weekly, at least a monthly basis. You need to manage your numbers, and I know again, when you're getting started, it's tough, and that's why there's a lot of great courses out there where you can learn how to be a bookkeeper for your own business. The bookkeeping is fairly easy, especially if it's 1 or 2 employees. I mean, I'm just trying to gauge based on the size of the business. It's not rocket science. So I do encourage you also not only to consider the CPA when it comes to tax preparation, but also the bookkeeping. And in terms of a resource, so we don't have a list of CPAs in LA specifically, but a great resource that Elianet can share right now in the chat is Camino Financial does have the largest bilingual blog for small businesses in English and in Spanish. We have over 1,000 pieces of content, and so kind of speaking to some of the cultural nuances of the Latino market, we write it considering some of that, or other minority groups and immigrants. So I'm sure if you just look for tax professional or CPA in the search bar, you'll find plenty of good resources, at least to evaluate the CPAs. Because I'll tell you, my first CPA, I fired them because you have to hold them accountable. You can't trust them too much. And apologize, there's a siren here, so I'm gonna mute myself.
Yeah, no problem. The good news is that I can see that the chat is lighting up with resources. This is part of the networking, right? In a COVID environment, haven't been able to get out to rub elbows and, do fist bumps to meet with people, but you come to a conversation like this with trusted professionals who are working with small businesses every day, and you start networking, and all kinds of resources have popped up there in the chat. So check that out. There's also been a great comment about resilience. And Inez is suggesting that businesses think about potential disruptions. COVID-19 was one example, but this also shows that we've got to be prepared for all kinds of disruptions, and build that in to your business planning. So you have like an all hazard sort of planning and thinking about what the possibilities might be, given that it's, weather and fires and all those kinds of things, how those might impact your business. She's also provided a toolkit that looks like it is being piloted right now, but might be a good resource to take a look at. So I'll be looking for more questions in our chat, but let's go back to the concept of the business plan itself. What should be in it? I mean, I just went through a terrible COVID crisis. I've had to change some of my product offerings, how I do business. What are lenders looking for right now when it comes to a business plan in 2021 so that I can access growth capital? Luann, you ready?
To me?
Yeah.
All right. So yeah, one of the things that we have found out is just how resilient business owners are. It was really quite amazing to watch how small businesses transitioned. Many of our restaurants went all of a sudden to simply takeout or online. So being able to be flexible and then look at future trends or ways that businesses are changing is really great to know when you're doing your plan, when you're getting yourself re-involved, looking at it with an open mind. We learned one thing through COVID. It wasn't business as usual. It was, how do you reinvent yourself? How do you keep your doors open even when your door couldn't be open? So what I would say is really look at your plan. There's a lot of places that we've talked about. You could go to our small business resource and learn how to develop a business plan. So stay on top of all those avenues and then think it out strategically on where you want to take your business in the upcoming year and years going forward, because we do know that that with the pandemic, it changed the way most of our small businesses do business. So we've become more inventive. People have utilized their resources and really reinvented their small business, as well as staying to their traditional or core business that they started with. So just really be open to changing and then how you're going to move your business forward.
Well, if you're still in business, that means you're pretty scrappy. And so the bank is looking forward to hearing, how you're going to continue that scrap despite the unknowns and uncertainties, and what got you through and what did you learn from that and how are you putting that to work going forward. Kenny and B, let's get you in this conversation. What is a successful business plan looking like these days?
I think what we have to really acknowledge is the pain points in a great vision. I think if you understand what are the pain points that you're trying to relieve in terms of your business, is very different pre-COVID versus post-COVID, right? COVID really helped us understand people needed food, people needed specific services, how were you going to deliver them? So I think as a business owner, if you're still there, you know what pain looks like in your business, what are your customers looking at. Talk to your customers to find out what is their greatest need and their greatest fears, because that may be an opportunity of value. So a great vision, you need to be a wonderful storyteller, because it is your intention and the ownership of your future of your business is what's going to sell. And I'm going back to the basics of cash flow and accountability. You really need to understand how the accountability is going to work and how is the cash going to grow given the investments you want someone to make in you, because it's about you. It's not about your business.
Mm-hmm.
Yeah, I mean, B and Luana, they said it all. I think it's just timing. I'm just gonna mention, just make sure you time this right. And in order to time this right and adapt correctly, because we all had to get very scrappy during COVID. I mean, we had to, including myself, had to cut salaries, and just you got to be careful that, of course, we need, luckily at Camino Financial, we already restored those salaries, and it's a tough job market. I mean, maybe so timing, and then let me actually, now I just thought of the idea. It's a job market, and so I think in order to retain your talent, you really need to consider like how you're going to adapt to this new work environment. Straight up, I am not the biggest fan of remote only work. I am a big fan of hybrid work. Funny enough, Google, Twitter, Facebook, Apple, they're all kind of reverting back, if you're following the news, on their policy related to remote work. But the point here is I think employers are being very tactful of how they were realizing we're not coming back to the office 5 days a week. We may need to come back to the office some days a week, but we also need to make sure that we can't just come back to the same office. We need to make sure that we're appreciating our employees a lot more, because that's going to be critical for retaining the top talent post-COVID.
Well, this is hitting so on where the chat is going. I do want to note that I love that Kevin put in there for small businesses as part of your business plan. Consider a business continuity plan. So yeah, you're planning for resilience, but what are you going to do when the disaster hits? How will you be able to continue? I love that concept. And just a quick question, because I think that this really gets to whether this is a business loan or a personal loan. And the question here is, how do lenders view owners who want to secure capital investment for the purposes of improving or enhancing the education skills of themselves or their employees? So like a certificate program in their field of service. I don't know if one of you just want to kind of tackle this as, the fine line between a different kind of product that's an educational loan versus a loan that really is, focused on acquiring equipment or customers or a different kind of strategy. Any thoughts about that?
Actually, funny that you say that. We're in August. This year we're going to launch what we're calling a solopreneur loan, and specifically one of the as we look at our customer personas and we look at one of the use cases is actually to get certifications. The reality is it's a great line. I think it's you're right in the gray, and currently right now, if you own a business and you need working capital, honestly, you can use that capital however you want. And you can use that for a certification. So a working capital loan, I believe, as long as there's no constraints on how you can use that capital, it's permissible use of that cash, even if you're an existing business, and you can totally use it.
Well, that's very interesting. Great to know. So to our panelists, I want to thank you. We wondered and worried how we would fill the time and how we would get all of this information out to our small businesses. We're at time. I do want to give people an opportunity to hear from you one last time in terms of where they look for you to find more information out about your particular organization. Luana, tell people, where do they find more information out about connecting with the Wells Fargo advisor?
So a couple of ways. We're on almost every corner, so you can always walk into one of our local branches or make an appointment to meet with an actual banker. You can do that. We have our small business resource.wellsfargo.com is another great opportunity. Gives you industry highlights, gives you testimonials from small business owners that have made it through the pandemic. And then again, that Open for Business Fund will let you know where there is the ability to go for some of those grants that we've given to our Open for Business participants. So those are a couple of ways to get more access to capital. And then closing words is it's still a journey out there. We know that hiring employees, costs are increasing. So have some grace. We know it's going to take a while. Small business owners don't expect to accomplish miracles in the next 6 months. We're going to have a little time still to adjust. So just stay positive, stay in there, and continue with your what you've shown in the past on how you've been able to survive through the pandemic.
Thanks for that encouragement. B, where do we find New Economics for Women?
I believe the link is in the chat. It's New Economics for Women, the whole name.org. The Women's Business Center has its separate website. It's new-wbc.org. So you can find a lot of the resources there. In closing, I just want to give a virtual hug to everybody to understand that self-care is important. This has been a very traumatic period for all of us, especially business owners who are trying to understand how they're going to help so many people survive, and as well as provide service. So congratulations for still being there. And we're all here to support you. So keep going, and it's only going to get better.
Thanks, B. I'm feeling that hug. Kenneth, tell us how can we find out about Camino Financial?
Yeah, you can find us at caminofinancial.com. We're built to engage with you virtually. So if you're interested in a loan, you can just navigate our website, review the requirements, and go ahead and apply, and you'll get an automatic decision immediately. In addition to that, there's 6 days a week, Monday through Saturday, we have agents available on chat, and you can also give us a ring. The number's available on our website. And again, just thank you so much for being here. I really think that in order to get out of this, it's really important that you take care of yourself and you educate yourself, because the environment is different. And I just congratulate you all for being here, and you're already at the forefront.
That's right. So that closes our panel for today. I do turn it over to my colleague, Shanae Rourke, who will close us out. But to my panelists, thank you so much.
Wonderful. Well, I think we can all maybe just unmute ourselves and let's give a round of applause to this great moderator and informative panelists. Yes. So much information, and agree, we could have probably gone another hour with all this great, insightful information. So I want to thank all of you, Tawana, B, Luana, and Kenneth, for this great seasoned information. We will now be taking a short break before we convene for the next breakout session, which will start at 10:50 a.m. You have a choice of two panels. One is seeking out and delivering on public and private contracting opportunities, a fave of mine, or a panel on building and leveraging your digital brand. Both key, both poignant for small businesses. And don't worry, the Chamber, as a benefit, is offering these recordings to each of you who have registered. So you can revisit any of the panels as you wish. To access the sessions, please look at the Small Business Summit agenda webpage and click on the preferred session, and it will direct you straight to where you need to go. Thank you again, all of you, and we'll see you soon.